Good evening, everybody. It's TK for ReadySetFutures, ReadySetFutures.com. It's 6 p.m. Friday evening out here on the left coast of USA for the 23rd of September 2016, and this is your daily market wrap-up. I'm going to be honest, folks. I might have to be a little quick. I'm definitely going off script here because I got to get out. But I do want to get you guys your daily market wrap up for the day. So let's kick it off. Let's get started here with the ES. Clearly, you know, if you guys have been watching, hopefully you have. Hey, we got another subscriber. So I want to give a shout out to whoever that was. Welcome to the channel. Feel free to drop some comments. Tune into what you like. If you like what you're seeing, definitely hit the thumbs up. In any event, here's the ES for the day. Here's today's action. Down, right? We said yesterday, if you guys listened to yesterday's market wrap, I said I was at 2173. I missed the entry by a single tick. Today, I put that order back on the board. I put it on at 2170. Unfortunately, never really got there. 3 points off. You know, and I want to tell you guys too about, you know, kind of my strategy, what my time frame is. That you guys know I'm a swing trader. So I'll hold a position anywhere from 1 day to a month if I have to. I don't like to, but you know, 1 day to a month is about what I'm doing. And, you know, so you guys can see here the overnight midnight bar 2169.5. So a lot of times what I'll do come the Globex open, if my signals are saying short, I'll put something on the board where I feel it being relevant. Most times it works. Most times there's enough juice in the market where I can get taken in. Past 2 days, I have just been unlucky. Here's yesterday's action. Or I'm sorry, this was yesterday's action. You can see the high on this bar back here, 2172.75. If you look in our data box there under the H, 2172.75, I was at 2173. And then in the overnight, I dropped an order at 2170, and you can see here our high 2169.5. So unlucky, although I do feel fortunate that from a systems perspective, the systems seem to be working pretty good. I have five or six different kind of home cooked indicators, and I use some for longer term trades, and I use some for my shorter term swing trades. Anyway, my short term swing trades are definitely short at this point, which is why I'm trying to get back in the market. But I have until about 6:30 a.m. my time before I have to check in at my real job, which, you know, as most of you guys, I can't trade during the day. So I'm stuck with putting an order on the board, making sure I'm protected, and, you know, walking away. But in any event, when we take a look at the day's action, so you did see that spike here at the around the European Open. We came into a nice tidy trading range before just selling off. Part of this very well could have been the oil talks. Saudi Arabia confirmed that there would be no oil cut. Iran balked at their deal, and we'll take a look at that on the CL. And we take a look at WTI crude. It is obvious that it just got smoked today. But ES kind of followed suit. It's interesting to see, you know, this run up here. This is Federal Reserve, you know, whatever we're going to call it, their hawkish hold. You can tell by my intonation that I don't feel that's very credible. However, right, it's what it is. So you see the panic buy, we should say, short squeeze, yes, and nothing behind it. We're starting to roll over, and we're back into this kind of into this chop zone. If we draw a profile from that announcement out to present, you can see, yeah, we traded up here around the volume point of control. It clearly would have shifted up, and as it shifted up, now we have shifted away. How many times have we said that in the past week? In any event, we're coming back down here. Now we're trading at the lower value area boundary for the move since the Federal Reserve's announcement. Not unexpected. And in fact, my target for a short was actually around 2150. It's a little shorter than 2150, but that's where I want to be. Also, you can see here this dotted line. This is the volume weighted average price. Also, we're trading right around there. This is not unexpected. So if you were short on the day, I'm gonna go ahead and take that back off. If you were short on the day, why don't we just draw in from the days open? There it is. But as you can see, again, this dotted line, the developing volume weighted average price. Great opportunity. If you were short, bam, right here, 2163.75 was your spot. What I like about this developing volume weighted average price is that you can see how it moved and changed and shifted throughout the day. So, yeah, great little trade here from 2163 down to 2157. That would have been the day's move. Secondary opportunity again, here on the rebound, and then follow it back down to the lower value area boundary. These are the trades I like to take, guys. You could take your own, right? You're supposed to take your own. You're not supposed to take mine. Develop your own ideas, develop your own algorithms, and trade what you see in the market. So that's the ES. Moving over to the CL. Again, keep in mind here, this is the 5-minute chart. Why don't we give you guys the whole deal from out to in. Here's the daily. You can see, right, we've been talking about we break trend, we start forming a new trend, and here's where we accelerated. We called the acceleration last week. And even in yesterday's update and the day before, we talked about how volume has shifted down, price moved away, but that we were still in a downward trend. And today you got it. Today was upsetting to the crude oil market, and it was all because of selling the fact after we bought the rumor. The rumor being that there was going to be some kind of production cut should Iran agree to a freeze, I believe it was. They said no. Saudis said no to their cut, and here's where it took off. I mean, it's pretty apparent where that happened. There's no real, it kind of faded out here off of the 70% retracement, and just absolutely fell apart. Here's that volume point of control from our from the daily chart, but not really much to say here. Today was a trade on the news, and purely a short traded day. Our bias in crude, I should tell you, I'm not actively trading crude right now, although I'd like to. Account needs a little work before I can do that, but as you can see, this is something that we have thought, we've been calling a short market here since back at the beginning of the month. How far is it going to go? I don't really know. Right, we've logical place that we reached out to today is this volume point of control. I would definitely expect it to hit a $43 handle, and I'd like to see it honestly at a $42 handle. If we get down past here, it wouldn't surprise me much if we reached out further to 41.50 before we really started to see what the market had in store for us. Interesting to note once we get below 40, that's when things are going to start to get really interesting for the equity markets. I don't know if you guys are zero hedgers or not. If you're not, I recommend that you are. They put out a couple of really good articles around sovereign wealth funds and what happens to them when oil reaches below $40 a barrel. Not Brent, but the light sweet crude, the WTI. And so, today's not the day to really dive into that, but let's just say it could be an interesting time in the equity markets if we get down there. So that's crude on the day. Still liking it lower. Moving over to gold. Everybody loves trading gold. Here we go. So our downward sloping trend line. We called it yesterday, price moving into our volume point of control, and it has stuck. Also near our trend line here. So it's all kind of fitting together. And, I think that we can also expect this a little bit lower. We do, right? And I hope you guys do take the time to maybe peruse some of the older videos. I feel like I'm repeating myself, although if we're getting new viewers and man, we're really getting some more subscribers. So I do want to continue to repeat, some of the calls or some of the discussions that we've had over the past, few weeks. So for those that this is old hat, bear with us. We do feel that gold here is in a longer term bull move, and it's exhibiting a pattern of move consolidation, and that's exactly what we've seen here since the December lows, consolidating, moving up, consolidating again, moving up, another period of consolidation, moving up. And these retracements are significant, right? Significant in that we can get a good feel for where we're going to pull back to, especially if the premise is a meaningful rally higher, and higher. I don't know. Call it to all-time highs, 2000. Who knows? Especially considering the amount of currency debasement that's going on worldwide. If you feel gold has intrinsic value, and history tells us that it does, then who knows where gold's going to go. You listen to some of the gold bugs, hell, they say $20,000 an ounce. That seems to be a little extreme, but nonetheless, I think it's much higher than where it is now. And however, for us to get there, our longs need to buy. And where are they going to buy? Where people are looking to sell. And again, that's where what you hear is a stop run. That's, in my opinion, all that really is the stronger hands taking out the weak hands. So we can obviously expect some big stops down here around 1300. That's going to take it lower. But it'll probably take it lower, I would imagine, down here into the 1290, possibly even 1280 region. If we get to 1270, it wouldn't surprise me. But you can see here on the right side of my screen, here's my favorite fibs, the 38.2, the 50%, the 61.8, and a little clever retracement of my own, our 70% retracement. I got this in red because I found this to be a very prescient level. In any event, that's our gold for today. We're going to zoom in just to give you guys the view, but we'll see. It's chop. It's chop all day. So if you were a range trader on gold today, you cleaned up. This is heaven sent for a range trader. Right around that volume point of control, right around that longer term volume weighted average price. So you could have scalped this all day for a buck on each side. So great market for an intraday trader. In any event, that's the gold market. And our last on the list is copper. Dr. Copper. As I said earlier in the week, copper proved us wrong. And I stand by that. You'll see, guys. You listen to me long enough, I'm going to tell you where I win. I'm going to tell you where I lose. I'm going to tell you where I'm right, and I'm going to tell you where I'm wrong. I'm not that guy who's trying to hawk their fabulous system that you're going to make millions on next week. I'm a trader, and sometimes in trading you win, sometimes in trading you lose. Sometimes you got the right idea, sometimes you don't. Copper, I had the wrong idea. But interesting to note. Why don't we kind of bump this in a level here? I'm going to go down to the 60-minute chart and twist out. So what I want to show you is this green line here. This is our volume point of control, and it's coincident on both this longer term profile as well as the shorter term profile. This moved up our high volume node. It developed down here, as of course it would, right? As we traded down here, volume built, and then volume continued to build here higher. Once that shifted and our trade stuck around this VWAP, volume weighted average price, we were going to move away. You heard me say it earlier in the video, saying it again. We moved away, and we moved away up, and that was when I knew I was wrong. If I had a trade on, at that point you got to take the loss, because hell, it could move all the way up here to 225 or higher. You don't know, right? If we break it back out to our daily, let me zoom in here to where it's relevant, right? This annual range here, this is back from a year ago, essentially. $2.30. I don't want to hang on to it that long. So I knew I was wrong, really back here around 217. Again, I'm not trading copper. I just like watching the market. If you are trading copper, I hope you're long. That's all I got to say. But, there's money to be made on the short side as well. And hey, there's money to be lost on the long side too if you're long. So, you got to know when. You got to know when to get out. Sometimes it's much more important than when to get in. Well, guys, it's a bit longer than I had expected it to be. 17 minutes long. I hope it's not too long for you, but I do enjoy doing these. We're going to call it. That's your daily market wrap for the 23rd of September. I hope you guys had a tremendous week, and I hope you have a tremendous weekend. I'm going to see you over the weekend. I'm going to try and drop a commitment to trader report. I'm going to try and drop a week overview report. And then we'll see you guys back here, same bad time, same bad place, for another daily market wrap up on Monday afternoon. ReadySetFutures.com. Check us out. Hit subscribe. Hit the thumbs up. And I'll see you guys later.